We should be live. So we'll give everyone a few moments to trickle in. I want to give a big thank you to Nick Carter for coming on the channel. It is much appreciated. I saw his conversation with Lex on his podcast, I believe back in March, and I was telling Nick before this call, it kind of changed my whole approach to crypto. Um, so before that call with Nick and we were just discussing this, I really just viewed crypto as just an asset class, just somewhere to park funds and hopefully the price goes up. But after hearing his podcast and his take, it changed my whole perspective on things that crypto can be a social movement, a political movement, etc. And a lot of that was the inspiration for me to create this YouTube channel. And I actually created it that same month that Nick's podcast with Lex went live. And so it's just really awesome for this all to come full circle and for me to have Nick on. So thank you, Nick. I'm wondering if you could start with just a brief background on who you are, what you do in this space, etc.
Hey, Justin, thanks for the invite. I'm very sick today, unfortunately, so I'm going to apologize in advance for not being as vivacious as I normally am and for sounding very congested and nasally. Um, so let me see. The main thing I do is Castle Island Ventures, which is an early stage venture fund. We invest in crypto startups all across the ecosystem. People think of me as a Bitcoiner, but actually we do a lot more than that. Other thing is I'm the co-founder of Coinmetrics, which is a crypto data company, one of the largest kind of enterprise focused crypto data companies out there, market data, network data, risk metrics, all kinds of basically anything you could possibly want to know about blockchains. They do. Aside from that, I am a content creator like you, Justin, and have a podcast as well, On the Brink, and occasionally write papers and columns and try and antagonize people. So those are my three sort of roles.
Awesome. I see some questions. Can we see the cube? Perhaps we could get to that, or if you could pull it up. But yeah, I wanted to start off.
One,
So you just
I will fetch the cube.
cool. While he's fetching that, so my understanding, Nick used to live in Boston, just moved to Miami, and in some ways that feels like a political statement.
This
In some ways, right?
It's actually engraved
Oh
with the
wow,
Coinmetrics logo. If you see that, very heavy.
awesome. Yeah, so I was just asking, can you color in like your decision to move from Boston to Miami? Just for context, I spent the summer in Boston, still living there temporarily, and went to school in Boston, so very familiar with the area. But like, I heard you talk about this on Bankless's podcast. In some ways, it's more of it's like a political move, right? In some ways.
Yeah, 100%. I'm actually very much like, I believe in alignment between your ideals and what you actually do. That's why I work in the crypto space, and that completely informed my decision to move 1,500 miles. It's actually literally exactly 1,500 miles to the south. And
Wow.
it's all in the same time zone, which is great. It's just tropical here, which is incredible. It's actually 78 degrees outside, and I felt cold. I went outside to get a coffee, and I felt cold at 78 degrees. Miami's ruined me. But yeah, it was a political decision. Um, I didn't like the governance in Massachusetts. I thought it was anti-crypto, anti-freedom, and the interactions I had with policymakers were very bad. And then by contrast, I get here to Miami and, I'm welcomed by, Mayor Suarez, and, Florida's policies, I think, are fundamentally better as far as individual liberty is concerned, and certainly as far as crypto is concerned. And as an entrepreneur, I want to reward the policymakers that are willing to, stick their neck out and say, yeah, we're going to foster a positive environment for capitalists, for people starting businesses, for capital allocators, and specifically for people in the crypto industry. So I believe in that alignment between values and action, and went ahead and did that. And it's also a nice bonus that Miami happens to be a lovely place. Thank goodness for that.
Interesting. It says, yeah, I appreciate you sharing some color there. I see some great questions coming in from the audience now. We will get those, but I do just want to kind of set the stage for the conversation. Taking a step back, Nick, I'm curious, like, can you share how you got onboarded into crypto? What was your experience like the first time? I'm sure you started with BTC, of course.
Yeah, actually, the first transaction I ever made was Dogecoin, believe
Oh,
it or
wow.
not. Yeah, 2013, mined Dogecoin in my dorm room, university, on my gaming laptop. I then subsequently lost the keys to that Dogecoin wallet. So, God knows what kind of small fortune that would have been. But yeah, actually, that was the first thing, and I thought Bitcoin was kind of this sort of excessively serious. Even back then, when 2013, 14 era, I thought it was like this, like really, like serious and like overly academic and sort of like taking themselves too seriously kind of movement. That was basically based on my reading of the Bitcoin subreddit. And eventually, I think 2015 kind of, crypto winter, I like took a second look at it. I'm like, okay, there's something here.
Yeah. But I'm curious, like, what was do you attribute a lot of finding crypto that early to luck? I mean, we were kind of like we were all around then, but I'm one of my biggest regrets is of course not focusing or paying much attention to crypto until this past situation with COVID. I mean, is was there anything there that really sparked that interest, or was it just like thinking about economics differently?
I've always been like, as long as I've been aware, I've been interested in financial markets. I've been trading like stocks since I was 15. Um, I had the good fortune to, have access to a brokerage account, and I could just make trades on meme coins or meme stocks. Um, so I've like been involved in financial markets like my whole adult life. And so to the extent a new financial market emerged, it was naturally something I'd be interested in. In terms of like finding Bitcoin, I mean, I was following it on stock, not stock exchange, mainly the Bitcoin subreddit. I distinctly remember the ad with the Bitcoin wizard, the magic internet money wizard, and I thought that was really funny. But yeah, I mean, I was just on the niche tech forums, and it was all over them in sort of 2012 era. So it wasn't that hard to find. But of course, it was very different to gain conviction on it as an investable asset. I certainly didn't. I never thought that it was an asset class or a gold-like product or something you could actually invest or speculate in. It took me a really long time to understand that portion of it, but certainly I'd been following the story from early on just because I thought it was interesting.
Gotcha. Awesome. Thank you. So jumping right into it on Bankless, you had a funny quote. I thought you said some Ethereans tolerate me. Me personally, I more than tolerate you. I really appreciate hearing your opinion. I would like you to provide some color on how your views differ between ETH and BTC and why you have what would I would say clearly would be a public preference to BTC. Although, as you mentioned before our call, you do invest in infrastructure projects on Ethereum and transact on Ethereum all of the time.
Yeah, I mean, I've made more transactions on Ethereum than any other blockchain, all other blockchains combined this year. The
Hmm.
thing is, you get pigeonholed into having a certain view on Twitter. You choose your audience, right? So you tweet about something, write about something enough, then your audience is a function of your views, and then your audience expects something back from you, which is it's like they want you to play the greatest hits, so like if you're Leonard Skinner, they want you to play Freebird. So and if you're the Eagles, they want you to play Hotel California, right? So that's exactly what it is with me on Twitter. Like my audience expects something very specific from me, and the question is like, do I give that to them? Do I just succumb to, the endorphin rush and give them exactly what they want? Or do I fire my audience? Do I um pull like, or I don't know, what's a good example of a band that like changed their sound dramatically and reinvented themselves? Like I think of it exactly like that. Do I pull like a Radiohead and like reinvent my sound halfway through my career? Um, I know it's like seems really self-indulgent to think about it like a band. I was actually just listening to Metallica earlier today. So that's what I'm sort of wrestling with. Like, there's not that much more to say about Bitcoin. I mean, there's like a lot. I think Bitcoin is going to do great. I think it's going to surpass gold as the most pristine form of collateral. But like, a lot of the Bitcoin story is already written, and so you look at some Bitcoin influencers and you see like Udi, for instance, he's like firing his audience right now, right? Um, but yeah, so some Bitcoin influencers are trying to like reinvent themselves, and others are just going to fade away a little bit. But yeah, in terms of what I'm interested in, it's all kinds of stuff. It's not just Bitcoin, not just crypto either. I have other interests. I invest in other stuff. Like I've been doing some health tech investing recently. So it's broader than just crypto. But yeah, in terms of our fund, we invest in all kinds of things. We've invested across a number of different sort of base layers, companies building on all sorts of different blockchains this year. So we're not really prescriptive. We don't require that founders build on anything. It's just whatever is the right tool for the job. In terms of my personal portfolio, it's still majority BTC. Like that's just, I don't really trade very much. Doesn't it's not something that I enjoy doing. I don't think I'm particularly good at it. Most of my financial exposure is through startups, through my funds, and through companies that I own equity in. And so, that's how I prefer to sort of, accumulate value or whatever is by building companies. So, my personal allocation to various coins, it doesn't really matter much to me. It's not something I spend any time thinking about really. Um, and yeah, in terms of my interest, it's less than like, oh, okay, well, I think X coin is better than Y coin or whatever. It's more like what gives us the best tools to achieve the sort of actual economic and political outcomes we want. And generally speaking, I think Bitcoin is the most robust and the most anti-fragile, effectively, against governments. Which is sort of the ultimate adversary. But there's other tools out there, and it's a mistake to think that it's sort of a monochain world. Like there's obviously going to be many interlocking blockchains here. But yeah, I mean, I've yeah, go ahead.
I wanted to ask you on that. So perhaps it would be helpful if you gave just like a brief high level overview of what Taproot is for folks that aren't too familiar or haven't been following that, because I am curious, like what that means for Bitcoin's future and Ethereum's future, and if there's some convergence there.
Yeah, Taproot is pretty esoteric. Um, I would say what it allows you to do is create conditional transactions whereby if certain probabilities aren't expressed, they don't get um, revealed on the main chain. And so that allows for more parsimony in terms of transactional overhead, especially if you have more complex transactions. What does that mean practically? It's unclear. It's really a matter of what developers are able to do with the technology. As we've seen with prior Bitcoin soft forks, it takes a very long time for developers to actually integrate the transaction types. SegWit took years and years to get to even 50%, I think, penetration. So it's unlikely that Taproot changes anything for Bitcoin in the near future. Schnorr, I think, is actually probably more impactful because it will mean that multi-sig transactions are much less in terms of their data overhead, which is a nice property. And I think multi-sig is just going to be very popular. But yeah, I wouldn't say Taproot changes much on the ground. Like, but the Bitcoin system is pretty well formed, pretty well understood. It's unlikely to sort of change that much here.
Yeah, interesting. So BTC is soon basically going to be the only, and I say this like not antagonistically, relevant blockchain that's proof of work, right? Ethereum's going to proof of stake and is going to be competing in that space. I've heard you talk about proof of work versus proof of stake. I've appreciated your open mind to it. I know you have, I believe, as far as when I last heard your views, you have a preference towards proof of work. Could you possibly explain that, and then maybe we can dive deeper in it?
Yeah, it's a difficult concept because, in some sense, I don't even like the language we use to talk about these things. But yeah, I was actually just working on a post about proof of work versus proof of stake, although I don't really agree with that framing of the dialogue. But you know, it doesn't just reduce to those two things. Bitcoin is a lot more than just a proof of work blockchain. It's like a bunch of bundled ideas and values, and then ways to express those values through code. Like for instance, keeping block space relatively narrow and bounded, that's not a proof of work thing. That's just a Bitcoin thing, right? So like only having maximum 4 MB per block, that's a design philosophy that has nothing to do with proof of work, but has a lot to do with keeping node operation cheap and maximizing decentralization, right? So that's one place where Bitcoin differs from Ethereum, differs from Solana. That's an important axis that expresses like a political preference, right? It should be cheap to run a node. But that's not a proof of work, proof of stake thing, you know. So we have to be careful and remember that this is sort of a multivariate analysis, and you know, there's more than one axis along which you know there's these debates. But proof of work is you know one of those key things. So people sometimes like reduce Bitcoin philosophy to proof of work, which I think is overly reductive. Um, but yeah, I mean, generally my views are proof of stake to me is a model of governance whereby the larger share you have financially speaking in the system, you know, the more influence you have, and that's a pretty standard model, I would say. Like that, you know, that's how corporations work for the most part, and a lot of financial consortia, you know, shareholder-based systems whereby you know, like Visa, for instance, started as a consortium with a bunch of different people that were bought in, and you know that's how the World Bank works in terms of countries or different shareholders in the bank, and that determines capital allocation. So you know, I think proof of stake like works. Like it, you know, it's clear that it works. There's you know a bunch of deployed proof of stake systems that function. But the thing that makes me nervous about it is basically the vulnerability to capture, which is, you know, I think ultimately most coins end up settling with exchanges and custodians and intermediaries, and then those are entities which can be pressured and have disproportionate influence in the system. And I, you know, I think just there's a revealed preference for folks to deposit their coins with intermediaries. And so, I mean, look, I know the objection is, well, you can have permissionless staking pools and things like that. Um, it remains to be seen what fraction of people would go to that, you know, go to that effort of depositing in a permissionless staking pool and retaining their votes, as opposed to just delegating their voting power to a third party. So that's like the main thing that concerns me. And I hope, you know, that's not seen as insincere, like concern trolling or anything like that.
Yeah.
That's a genuine concern, is that there's the prospect for capture. And like I can talk a bit about how I think proof of work is different. But yeah, that's like the main thing I would be nervous about.
No, I appreciate that. I guess what I'd push back on, or not push back on, but ask for clarity on is we could also argue in some ways proof of stake does provide a level playing field. I mean, we're seeing tools like Rocket Pool come online, which you alluded to, that are permissionless, decentralized staking solutions where everyone earns the same yield. But with a proof of work system, obviously, like to be a successful miner and to truly profit from it, from my understanding, like an at-home rig, you doing it yourself or me doing it myself, we're not going to have too much luck. We really do need to put like have an advantage with our energy costs or have some type of scale with our hardware, which is not something that everyone has access to. I mean, what are your thoughts there that proof of work could be more centralizing it, that there's going to be less proof of work miners that can participate in the network?
Yeah, so that's the crux of the debate. It's basically what are the economies of scale in mining as compared to the economies of scale in a staked system? And that is, I think, where the debate ultimately will hinge on that exact question. Like, is there a positive feedback loop whereby you are a dominant miner and you continue to gain hash power and capital and you become more and more dominant? And equivalently, is there a positive feedback loop where you're dominant custodian or intermediary and you amass a lot of coins and then you become influential, such that there's barriers to entry and that no competitors can emerge? So, like, really, how competitive is the capital allocation and intermediation game, and how competitive is sort of like the hash rate acquisition game? And that's kind of an empirical question. Like, we'll find out, you know, but we can also make some sort of educated guesses. So one good thing about staking is that it's very easy to take physical delivery of your coins, right? Because validation in blockchains is generally cheap, not always cheap. You can always withdraw your coins. So in my mental model here, I expect that Coinbase becomes a bank and other banks become crypto exchanges, and basically you have a bunch of large banks that hold everyone's coins. And Coinbase has something like 2 million Bitcoins. Um, Binance has a huge amount, probably 500,000. I haven't looked at the data recently, but like it's kind of like a terrifying amount are held with intermediaries as opposed by individuals. Um, one reason that you might think there would be economies of scale in intermediation would be that the exchange environment will get more regulated, and you'll need a bank charter, or you'll need to be federally regulated, or something like that in order to be a viable exchange. Like the government will come in and say, you need to satisfy these qualities. You need to have, you have to do these disclosures, and you have to raise this much capital. Like that's how it works for banks. You have to satisfy a long list of criteria and raise a very material amount of capital to even be eligible to be a bank. So, that would basically create a hierarchy where you have really big exchanges that have passed the criteria, and then everyone else. And it's impossible to go from being a new startup exchange to being a successful established one. So that would entrench a few large financial entities as like the de facto financial institutions where everybody goes to deposit their coins, and they do the staking for everyone. Um, that would be a bad outcome as far as like the decentralization of a staked network is concerned, because the government as a regulator likes to regulate a small number of large entities as opposed to a large number of small entities. So that would be one situation where I'd say, okay, there is an economy of scale. Now, on the proof of work side, hash rate, I would say, is like like it ultimately comes down to like who is able to get the machines. Are the machines like commoditized, or is there gated access to the machines? Like, so that's one crux of the debate. And then, is there stranded or cheap or curtailed energy? Is that in like one location, or is it in sort of many locations around the globe? And then it also comes down to capital availability for miners. Like, can miners freely raise capital? Is it a very competitive industry with low barriers to entry, or is it a less competitive industry where like a small handful of miners control all the hash power and control the access to the energy and access to the machines? And just based on like what I'm seeing in the market, it's very competitive. Like miner margins are uniformly high right now because China shut down half the mining, but generally speaking, I'm seeing enormous vibrancy in terms of the firms active in mining. It's pretty competitive. Like there's a new listing today in mining, Iris Energy. So there's new listings all the time, which means that public markets capital is widely broadly available. Um, are there really big mining firms? Like yes, but is it one or two firms that are always the biggest ones, or is there turnover? The answer is there's a lot of turnover. Um, there's a regulatory element where countries are making it harder and easier to mine, which basically kills off some of the large firms from time to time and rewards other firms. So, I'm actually pretty encouraged by the decentralization of mining. Now, the one thing is that the block template construction is still pretty centralized. So, um, you know, there isn't a model yet where individual miners could really determine what kind of transactions they're actually mining at the pool level. And there is so this would be the analogy to staking through one of these decentralized pools, right? There is software that exists to do this, but miners don't use it. So anyway, that's like sort of my analysis of the relative decentralization of the two things. I think mostly, though, I would say it's like we'll see where the chips fall. Like we'll see what happens. It's like hard to sort of predict these things.
Yeah, no, I appreciate that overview. Going back to the China situation, I'm curious, do you think China halting mining efforts makes like is more compelling that proof of work is decentralized, or would that show that it is more centralized? Because I could see both sides of the coin here, where like one side a whole country is excluded from mining now, right? Like, so you're centralizing it with other countries. But the flip side of that is like a power that we know wants to have their hand in heavy regulation now can't effectively do that with mining. So, what are your thoughts there?
Yeah, I mean, are you so you're familiar with the concept of like the Gini coefficient, I presume?
Yes, yes.
So Bitcoin's mining's Gini coefficient would have gone down when China banned
Okay,
mining because it reduced the concentration. There's other indices you can use to measure industry concentration, like the Herfindahl index, kind of related. Um, but so basically, it was a progressive force for the decentralization or dispersion of hash power among more entities. So it was a good thing. Of course, it does shows that in individual countries making policy can influence the network, but China was just the largest node in the Bitcoin mining network. Obviously, there are lots of individual miners, but they were the largest kind of stakeholder in Bitcoin mining, and this eliminates one risk factor, which is that they try and take over the mining and commandeer Bitcoin mining in some way. And it worked to the benefit of the U.S. And the good thing about the U.S. is that policies made on a state level with regards to mining, as opposed to primarily a federal level, which is very different. Like the U.S. is much more federated than China is. So now the U.S. is 34% of the network, which you might say, well, that's bad. Um, the network is one third American, but America is not like sort of like just a unitary place. Like it's 50 different states. And I presented this data back in Texas. Like mining, is distributed among quite a few states in the US, and the states themselves kind of like set energy policy. So, I think that's like quite a good thing because it means that the states are like like a bulwark against like the federal government. Whereas in China, of course, it's really just one man that makes decisions. So I'm like pretty happy with the fact that mining is more U.S. based than China based for sure.
Gotcha. Thanks for clarifying. And then the last thing I want to touch on with proof of work is this. I hate the term FUD because I think it's like not productive, but this energy FUD around proof of work. I think you were a big part in leading the charge defending against proof of work and Bitcoin and crypto in general, and I appreciate that and agree with your take. But I could also see the counterpoint where people would say, well, like, if we don't believe this technology has any value, even if that energy is renewable energy that's being used for mining and for proof of work, it's still a poor allocation of energy. Now, I don't agree with that take. Obviously, I see the value in Bitcoin and crypto in general, but I think Anthony Sassano had a great take where it's like the narrative wins here. It doesn't really matter what the truth is. And so, what are your thoughts there going forward? Of is that's go if it's going to be a big challenge for Bitcoin? I saw Discord was looking at integrating Ethereum and for NFTs or some concept there, and they had to walk it back because climate activists basically pushed back, saying, "No, ETH is proof of work. We can't do that." So, what are your thoughts there?
Yes, the narrative doesn't win, by the way. Like reality wins. The notion that certain types of computation are morally good and other types of computation are morally bad, right, is a false notion. It's not going to win, right? That's not how we distribute resources. You distribute resources based on like who is willing to pay for electricity, and that's it. We don't, like electricity has like net neutrality, right? Like your electricity provider doesn't ask you, hey, are you watching like what are you watching on Netflix, right? Are you watching like a nature documentary, or are you watching Keeping Up with the Kardashians? Because if you're doing the latter, like, sorry, we're not going to turn on your lights tonight.
That's funny.
That's not how it works, right? So trying to rebrand electricity is this thing where we determine what usage is valid and what usage is invalid. That is this Malthusian concept, which is like very anti-human, right? It's basically saying like a handful of bureaucrats should decide what are valid uses for society's resources and what are invalid, and that's going to fail, right? That's a incredibly backwards kind of zero sum mentality. The solution, of course, is to produce more energy cheaper with increasingly decarbonized sources. That's completely doable. Nuclear is obviously the greatest tool there. But you know, like there's a portfolio of things you can use. So the um the climate activists that you know are peddling these Malthusian views of like, oh yeah, like we alone should be the ones to determine what's a valid source of computation or energy or not. They will lose because like nobody actually wants that, right? So let's say they take power and they say, yeah, you know, Bitcoin's immoral and you know, logging on to you know whatever right-wing forums is immoral, right? Because you're using electricity. Then like what happens when they lose power and you know the you know their right-wing counterparts take power and say, oh well, you know, reading the New York Times is immoral and you can't use that. And also you know, abortion clinics can't use electricity anymore. And you know, like we're just going to selectively moralize about everyone's uses of electricity instead of trying to build a more capacious grid. That's not going to work.
Yeah.
Like the solution here is abundance, not like this like you know, this like scarcity like debates over what's a valid use of our scarce resources. So I think the narrative loses, and as long as there's like one policymaker in one country that's willing to foster proof of work, you know, it'll exist. And we know that that's the case because there's whole countries that have subsidies for proof of work mining. So the question is really just what is the carbon intensity of Bitcoin mining? And that's something that just depends on various policy positions. So it depends on whether places ban or subsidize mining, but there's always going to be someone that's willing to have the mineral wealth of proof of work, and there's always going to be countries that are willing to extract it. It's just the question is it going to be Iran and Kazakhstan, or is it going to be the USA and Norway? And so I would obviously hope that it's the more sustainable countries that win, but if not, it'll just be something that the Gulf states do and that Central Asia does, and I think that would be a bad outcome.
Yeah, it's interesting. I appreciate you clarifying. So let's talk the 21 million hard cap. The ETH community, I would say, a lot of notable voices have said like that's not sustainable. Transaction fees alone, it doesn't seem like they're going to be able to sustain the network. Like there will have to be some continued inflation for BTC. I feel like you're the best person to ask this question to, perhaps. What are your thoughts there?
Yeah, so the mistake there is thinking that Bitcoin could change the cap and still be Bitcoin. It just wouldn't be Bitcoin, right? It would be something else. It'd be like Bitcoin Plus. Um, you know, like so, like Bitcoin's original specification is 21 million, and there's no changing that. We can't get Satoshi to go back in time and like edit the email or the blog post. So you know, basically the claim is that if there's an insufficiency of fees, then a new altcoin will emerge, which you know has some common lineage with Bitcoin, but has 22 million or 28 million coins or whatever. And you know the claim is that this new altcoin would be identical to Bitcoin in every respect, except it would just have more issuance. And you know, the question I would pose to the people that think that will happen is, why would anyone opt for a system which is just like Bitcoin, which hasn't really changed much, but which has one variable tweaked, instead of like a whole new system with zillions of variables tweaked, like anything, like Avalanche or Solana or Ethereum or whatever? Like, so if you're gonna make it, if you're gonna go to the effort of making a new Bitcoin, why would you just change one thing when you could change everything? So I don't think a 21 million plus or a 22 million Bitcoin would win in the market, right? That doesn't seem that likely to me. Now the question is, what happens to the original Bitcoin if there's a fee insufficiency? Well, there's two possibilities, I think. One is that you modulate the block size to achieve a target level of fees. Some people don't think this is possible, but I think it is. You could have a congestion system whereby you actually target a level of congestion on the Bitcoin network, um, so that it's permanently costly, right? Because fees in blockchains are like effectively zero when you're not reaching that threshold of congestion, and then they're very high thereafter, right? So it's like you know, there's like convexity, right? It's not a linear relationship. So all you have to do is just modulate the block size such that you are in a permanent state of congestion. So I think that's possible. The other thing to do would be to, and this is a very unpopular idea, but maybe it'll be more popular in like 20 years when people have had some time to think about it, would be to, and I'm going to get blown up for saying this, but like to have an expiry on ancient UTXOs. So like, let's say 10-year-old UTXOs, you recycle the ancient ones that haven't moved and are presumed lost. And so that way you keep the cap intact, and you make the old UTXOs eligible to be rewards for miners. So there's like I'm not endorsing any of those two options, but there's certainly models to keep the cap intact, if it turns out that the fees aren't sufficient.
Gotcha. I see some cool questions from the audience, but there are a few more things I want to cover before we get to that. Last May, when there was this 50% or so drawdown across pretty much all of crypto, I think I recall you tweeting something like saying you were hopeful that we were past the point of like crazy volatile cycles. And so that leads me to the question of like, where do you think we are in this current cycle? Do you believe in, people are hyping up the idea of a super cycle, or do you think we're still on a 4-year-ish cyclical timescale led by Bitcoin?
Yeah, I don't believe in the halving. I don't believe in the halving as a driver of economic cycles. So I don't even I think it's illusory that people, view the halving as like a tick of a clock, which drives volatility in crypto more generally. I think that's an illusion. Excuse me. But yeah, I mean, I think I remember the tweet you're referring to. I was optimistic for a time that we'd get beyond the volatility and the
Yeah.
nonsense, and get into a smoother cycle. I mean, I think Bitcoin at this point is probably on its way to sort of realizing its destiny as like a global non-sovereign asset that's trustworthy and does kind of exactly what it says on the tin, and it's something that corporates and sovereigns will adopt as a gold alternative. I think it's well on its way to doing that. And so maybe it'll be more gradual growth as like more central banks acquire it, basically. um, in terms of like the rest of the industry, like I mean, the fact that like Shibe, whatever Shiba Inu hit like $50 billion, like that unfortunately requires that there's very very significant volatility, because like if something that's worth zero is worth $50 billion, that there's a guarantee of subsequent enormous drawdowns and volatility. And so is there any evidence that people have ceased to invest in like meritless meme coins? Like, no, like there's evidence to the contrary. um I think it's more of a societal thing. It's not just a crypto thing. It's just like when interest rates go negative and inflation increases dramatically, like people always invest in like crazy nonsense, basically. And the crypto industry is the most frothy, most explicit manifestation of this. But it's happening in every single asset class: housing,
Yeah.
equities, fixed income, collectibles, commodities, every single asset class you can possibly imagine. Money is this like hot potato that nobody wants to hold anymore, right? Nobody wants to hold money, but the government keeps forcing trillions of dollars of money into the economy. So, of course, it's going to express itself in terms of meritless investing. Um, so yeah, it's like a societal problem now. Like there's a gigantic asset bubble which was created by the Federal Reserve, and it's going to end badly, of course. So our concern should be more broad than just the crypto industry. It should be everywhere.
Gotcha. So let's exclude Bitcoin from the conversation for a minute and just talk about the layer one, like smart contract platforms. I have like candidly, I probably have a bias to ETH. I mean, I hope I can look at the technology and like come to a rational opinion and get past that bias. But truly, my understanding is that Ethereum has the only plan to scale in a decentralized manner in a sustainable way. And I'm curious, what's your take there? I mean, what are your thoughts on Solana, Avalanche, Cosmos, etc.? If you've looked into those blockchains.
Yeah, I haven't like done the work, to like have a particularly educated view of any of those three blockchains, but like my view is like effectively we're all dealing with the same problems as like blockchain administrators. It doesn't matter which blockchain you are. It doesn't really matter what like specific technical nuances you have. Like ultimately, there's very specific trade-offs that are native to blockchains that you can't get away from. So like if your security model is anybody who wants to run a node can run a node and audit the validity of the transactional log, right? If that's the assumption, and I think that's increasingly not the assumption actually, like running a Solana node is like impossibly difficult.
Yeah.
Like running a Solana full archive node, like a full archive node, I don't think anyone outside of Solana does that. Coinmetrics is trying to do that, but it like requires like incredibly performant hardware, like supercomputer type stuff. It's like it's not something that's accessible even if you have access to the best hardware at like your your cloud service provider. So I actually think we've reached a point, like we've crossed the Rubicon, where like there will be blockchains that no one can validate, and so then it's like kind of a weird, bizarre world where it's sort of just a theoretical blockchain. It's not a blockchain anymore. But leaving that aside, let me get a glass of water. Actually, sorry, I'm like quite sick.
Yeah, and a special thank you to Nick. He's just battling COVID now, pretty much over it. But yeah, for those just tuning in, we are very appreciative for him coming on. I see some really interesting questions about EIP 1559 and such, and so would definitely love to bring that up after Nick finishes answering here.
Yeah, I want to talk about it. I have some like very contrarian views on EIP. But yes, I'm extremely sick. This is pretty much all I can do for entertainment. Is do live streams. Okay. All right. Where was I? All right. So, okay. Let's say the assumption is that anybody who wants to validate a blockchain can validate it. Is that a fair assumption?
Sure.
Then your ultimate trade-off is like there's a certain amount of data you can push through the network per unit time, and the constraint on that data is the lesser of bandwidth, computational ability, and storage. And the actual gating factor most of the time is disk IO, right? The ability to just write data to a hard drive. The other two factors aren't really the bounding factors, right? And so if you reach this limit, whatever it is, let's say it's 100 megabytes a minute or whatever, we don't know what it is, you then bound your block space and you introduce a constraint, and then you get high fees once that limit is reached. And that is a universal like truth that applies to every blockchain. Is that kind of a fair assertion?
From my understanding, yeah.
So then the question is, are you so there is an actual physical constraint on your ability to push data through the system. Has any blockchain like eliminated this constraint? No, in my opinion. If they did, it would be like kind of a new kind of system. And so I think ultimately you have to scale in the same way that the payment system scales, which is you introduce sub-ledgers. You introduce alternative transactional spaces that periodically settle to the ultimate ledger. And you could say that's like somewhat describes the architecture of Lightning. You could say describes the architecture of Liquid. You could also say describes like the roll-up architecture. I think that is the way. I think Bitcoiners have been pretty intent on that model since 2015, and increasingly Ethereum culture has embraced that model too, with rollups being the primary mechanism, which I think is the correct way. And it's not just the correct way; it's the only possible way. So if and when other blockchains reach capacity, then they're going to do the same thing too. There's just an infinite demand. I think Greg Maxwell said this. There's an infinite demand for highly available replicated database storage that's free. And so once you fill up that demand, then you have to introduce alternative transactional spaces that maybe have different settlement assurances, and maybe settlement isn't final. Like when you make a credit card transactions, it's not final. It's faster. That's on a distinct network, which ultimately settles to the bank interbank clearing network after 120 days. Like basically what we're doing with blockchains is the same thing that payment networks did over the last 50 years. It's the exact same thing. If you want to learn about blockchains, just read the history of payments in the United States. You'll learn everything you need to know about a blockchain in those textbooks.
Well,
So yeah, that's a very long-winded way of saying everyone is going to have to do the same thing eventually, and if you do it first, you're going to do well. So Ethereum, targeting a roll-up centric approach is going to be successful, assuming
great. Yeah, no,
it works.
I know a lot of folks had questions about layer twos in here, so really appreciate your take there. You said you had a controversial opinion on 1559. Can you briefly touch on that?
Yes. So um, I wrote a blog post. I wrote a column in CoinDesk about this. Um, but so I understand why 1559 was implemented, or I believe I understand why. If I'm right, I think it was to ensure that Ethereum was the native currency. Ether was the native currency on the Ethereum network, um, such that miners could not accept out-of-band payments in exchange for inscribing new ledgers onto the blockchain. Because in theory, I could go to a miner and give them USDC on Tron or something in in exchange for including my transaction. But that abstracts away. That's fee abstraction. That abstracts away Ether. But we want Ether to be the dominant currency on the Ethereum blockchain, and so we introduced the fee burning mechanic. Is that kind of like a fair description of why we have EIP 1559?
Yeah, I would say so.
And also to stabilize and cause more create predictability in terms of fees.
Yeah, and the dynamic block sizing, etc. But I think, yeah, the general core concept you've nailed.
So we want to make ETH the key currency on the Ethereum blockchain, the same way the USD is the key currency in the USA, and we want to create more fee predictability and stability, and possibly improve the UX around fees. Those are good justifications. Those are generally good ideas, especially the first one. I was actually very concerned about fee abstraction.
Mm.
The Here's the problem: is that EIP 1559, regardless of the intentions, also accomplishes other objectives which may not have actually been anticipated, but it has these consequences. And one consequence, and a certain action can have an intent, and it can have a intended consequence, which you do achieve. But if there's another alternative consequence which is not intended, which is bad, you have to acknowledge that that thing exists too. So one thing it achieves is it sets the interests of transactors, consumers of block space, against the interests of holders of the coins. And if those are two different groups, now they're at odds with each other. And so I'll explain. So if I'm a transactor, I prefer fees to be low, basically, and I want my usage of Ethereum to be as cheap as possible. But if I'm a token holder, I now benefit because fees are now burnt, and so that is accretive to me as a speculator. And so what we have in this situation is like the holders really benefited because fees are now kind of structurally high and they're burnt, thus meaning there's this sort of deflationary, disinflationary aspect to ETH. But if I'm a transactor, I'm probably a little peeved by that because, I generally would prefer that we, increase block space and try and keep fees low and not have this fee smoothing thing. I probably prefer that there's periods where transacting is really cheap as opposed to just this smoothing at a relatively high level. Now, I'm not saying that, ETH developers can determine what fees are, but this does create this sort of outside view that token holders agitated for change, which benefited token holders and was like potentially costly to transactors. So that's sort of, I think, the unintended consequence of that EIP.
Gotcha. Yeah, I think the argument, like coming from the Ethereum side, the counter to that would probably be something along the lines of, like, while you make some great points, our goal is that users live in a fee-free world at some point, whether that's through rollups, data sharding, etc. And so like eventually the end user is not going to be paying that fee. It'll be the cost will be socialized from a roll up basically. But I think you make some great points there. I know you're sick and like we've committed to an hour, so I kind of want to start winding the conversation down. And again, appreciate your time. But last thing I wanted to cover, I know we don't have enough time to really give this topic justice, is just DeFi in general. You said ETH is Ethereum is the main network you transact on more than any other chain combined. Anything particular you do in DeFi? I also saw some questions about NFTs and haven't heard you speak publicly about them, I don't think. So just if you could briefly give us an overview of your involvement there, I think it'd be really interesting.
Yeah, I mean, DeFi, is an important thing. I think it's going to become like the dominant way finance occurs in 5, 10 years. I think every investment bank will have their DeFi arm where they just write boutique, contracts that are highly vetted and audited and can last for 100 years and do one thing extremely well. I think we're going to look back on this period where like Anons wrote DeFi contracts is like we're going to look back on it with like amusement. It's like, wait, you're telling me like you let random dudes like write contracts controlling billions of dollars and there was like maybe a little bit of vetting and that was it. It was just like I think Goldman, will eventually have their DeFi contract authoring arm. And like the question is like how do we like get institutions to actually use DeFi, right? Because they can't really engage with a contract where capital is pooled because you don't know who your counterparty is. If you're doing a peer-to-pool arrangement, if you're Uniswap LP or whatever, like you don't know who the heck you're transacting with. So that actually doesn't work in our current regulatory confines. So we have to like find out an answer to that. I think the answer is you'll have permission pools. And so you'll have like your lit DeFi markets and you'll have your dark DeFi markets, so your gray markets. So you have your lit markets where, consortia of financial institutions know who they're transacting with, or everyone has done a proof that they are part of that pool. And, there's some cryptographic model where you can have assurances that everybody is, in some agreed upon set of known entities. And then you just have like regular old DeFi, which still exists in parallel to that. So I think that might be one way to like, cause that convergence to occur. We have to figure that out. Yeah, in terms of like what I use DeFi for, mostly just experiments, just to see how things work. You have to use this stuff to have an opinion of it. I think that was a mistake I made for a long time. I was just not a user. NFTs I think are important. We've done a ton of NFT investments at the firm, not in specific NFTs, but in platforms.
Yeah.
I think the right click save stuff is like so stupid, but like also really indicative. Like I haven't seen this much anger at a crypto thing since like Bitcoin, basically,
Mm.
and that's really illustrative, I think, because the fact that so many people like are determined to not see the merit of uh, attaching property rights to digital content, which is a very simple concept, right? That they refuse to see it shows it's like a big thing. Like if NFTs didn't matter, all these people would just ignore them, right? They wouldn't be upset about them.
Yeah.
So, the concept of an NFT is never going away. My critique of NFTs is that it's incredibly general. It's too general. It's not a useful term at all. We're going to have to create a taxonomy and subdivide it. Like, there's just so many different concepts embedded there, like NFTs that carry IP rights, that are programmable, that aren't programmable, where the issuer has an obligation, they have a duty to the NFT holders, where it's like a fully sovereign thing that exists entirely on chain, or is it like a partially centralized thing? Is the issuer maintaining it on behalf? Like so. There's all these like different ways you can create a taxonomy around NFTs that nobody has contemplated this stuff yet. No one's created like a good model. So there's a lot to work out there. But the thing is, like, as someone who is like an audience, I try and avoid the view that I might be like monetizing my audience. So I
Yeah.
basically never refer to anything I own if I think I have the ability to move the market for that thing. So that's why you'll never see me actually really publicly mentioning about any sort of like thing that I own. So yeah, you'll basically never see me making reference to an NFT that I might own.
Yeah, no, I appreciate that. I myself, I would never tell anyone to try to handpick like a DeFi coin or an NFT. It's just a crazy thing to recommend. Just stick to like the base layer ones if you're interested. If someone mentioned you had a Grimes NFT, I don't know if that's you purchased one.
Yeah, I bought one for my sister. She's a big Grimes fan, but then
Oh, awesome.
they went down a lot. So
I guess you don't have much sway in the markets.
I want a
Um,
refund. Yeah.
yeah, I guess last question. I'm curious. You mentioned you play around with DeFi. If you're comfortable sharing, what percentage of, let's just say, your BTC ETH holdings are earning yield, if any, or is it just not worth the risk to get, say, like a 5 to 10% yield on those layer ones?
Oh, right now it's 0%. Oh, you earning yield, like in decentralized or centralized yield gen
I
platform?
was most curious about decentralized in DeFi in general, not the centralized platforms.
0% DeFi because like I don't have a 9-figure account size where I think is like the minimum for it to be worth it in terms of the transaction fees.
Hmm.
Um, but yeah, I have some in like centralized lending platforms, which are very handy actually, just in terms of like being able to borrow against them. Um, and I'm an investor in a couple of those, so you can probably guess which ones.
Absolutely, yeah. Cool. Well, yeah, thank you. We have to let you go so you can recover and get better. And of course, this has been an absolute pleasure for me. I mean, like I said, when I saw you on Lex, I knew I wanted to talk to you at some point, and it's just so nice that like 7 or 8 months later, I'm able to come full circle and meet you and have this conversation. And I learned a ton. I hope this was valuable for the audience. Just last thing, where can folks find you if they want to connect or learn more about your background and read your work?
Yeah, thanks, Justin. It's been great. Sorry that I've been out of breath this whole time. I feel like I just climbed like 20 flights of stairs or something. Basically, my lungs are like full of mucus right now. Twitter.com, Nick _ Carter. And then really the best place is nickcarter.info, where I put everything that I publish is on there. So that is the number one place for your Nick Carter content.
Awesome. If you're watching this recorded, it will live on YouTube kind of forever, for as long as we see fit. The links will be in the description, so you can just click there. Thank you so much, Nick. It's been an absolute pleasure. Until next time, we really appreciate it.
Thanks, Justin. We'll have to do this again when I'm healthy and
I
can
can't wait.
actually form a sentence. Yeah.